Hey everyone, welcome CoinEx's weekly market recap. Before we dive in, don't forget to hit that subscribe button so you won't miss any of our weekly market updates. Let's kick things off with the most mind-blowing event this week, Trump's Bitcoin Act. What does this mean for us investors? Trump's planning to buy 1 million Bitcoin over 5 years as a national strategic reserve. This literally upgrades Bitcoin from a civilian asset to a national asset. Let's break down the pros and cons from an investment perspective. On the bullish side, 1 million Bitcoin is about 5% of the total global supply. When a superpower starts buying big, supply and demand dynamics shift fundamentally. Less supply, more demand, prices go up. It's that simple. And boom! Bitcoin's already smashed through $112K all-time high. For long-term holders, this is absolutely massive news. More importantly, this sends a powerful signal. Crypto is shifting from speculation to legitimate reserve assets. Think about it. If the US leads the way, won't other countries follow? I think it's pretty likely. Once we get a trend of nations stockpiling Bitcoin, supply gets even tighter and we could see some crazy price action. Trump also hinted at potentially adding ETH, SOL, ADA, XRP to the reserve mix. Sure, Bitcoin OG Tyler Winklevoss thinks only Bitcoin meets strategic reserve standards right now, but the signal is loud and clear. For anyone holding these major alts, this is huge bullish news. But let's talk risks too. Surveys show only 10% of US voters support more federal crypto investment, which means this policy could face serious pushback. Plus, economists point out Bitcoin can't be widely used for payments or pricing, and market risks aren't fully solved yet. If execution falls short or faces strong opposition, market sentiment could flip fast. Looking at crypto industry trends, this act is basically fast-tracking institutionalization and compliance. Over the past few years, we've seen more and more institutional money flowing in, from MicroStrategy to Tesla, and now national-level reserves. The trend line is crystal clear. What does this mean for investors? Crypto is evolving from a high-risk speculation market into a more mature asset allocation choice. But here's the thing. This might gradually reduce market volatility. For those who love high-risk, high-reward plays, this might not be great news. But for investors seeking long-term stable returns, this is definitely a positive signal. Now, let's check out the funding scene. This past week, we saw 20 public funding rounds in blockchain and crypto, totaling a whopping $606 million. Where's all this money going? Mainly infrastructure and AI. What does this trend mean for investors? The infrastructure boom tells us the whole industry is laying groundwork for the next explosion. Take Asina. They just raised $3 million for their Bitcoin Smart multi-sig wallet that lets users interact directly with Bitcoin apps through embedded applications. This kind of infrastructure improvement massively lowers the barrier for regular users, expanding the entire market base. The AI track is even hotter. ALF. AI scored $2 million in strategic funding. They help users discover high-potential tokens early. In this information overload era, having AI filter projects for us is definitely a real need. And Donut Labs just closed a $7 million seed round for their AI agent-powered executable crypto browser. From an investment angle, AI plus crypto combo is definitely worth watching. On one hand, AI boosts trading efficiency and lowers investment barriers. On the other hand, crypto's decentralized nature can solve AI data privacy and ownership issues. This combination could spawn entirely new business models. Gaming's got some highlights too. Gaming platform Arcade raised $4 million with a 16Z crypto leading. But what's really wild is Sharplink Gaming, this US-listed company, just got $425 million in private investment, and they're planning to use it to buy Ethereum as treasury reserves. This case is super representative. It shows traditional public companies are fundamentally shifting their view on crypto. From an investment strategy perspective, this companies buying crypto trend could become a major price support factor. When more and more companies treat crypto as treasury reserves, demand side gets continuous support. DeFi's got some solid highlights too. Solana Ecosystem's quant strategy platform Neutral Trade raised $2 million, and stablecoin issuer Avalon Labs closed their strategic round. Avalon Labs is particularly impressive. They're serving over 20k BTC, have 300k plus active users, and over $500 million in total locked value. What do these numbers tell us? DeFi isn't some niche toy anymore. It's legitimate financial infrastructure with real user bases. From an investment perspective, DeFi projects with actual users and revenue might be way more valuable than pure concept plays. Most noteworthy is Solana ecosystem's token launch platform, Cooking. Citi, they raised $7 million with top-tier institutions like Jump and CMT Digital participating. They're proposing a totally new token launch mechanism, including value redistribution, confidence pool mechanics, and social-based value distribution systems. This innovation is really interesting. It's trying to solve current token launch problems like rug pulls and insufficient community incentives. From an investment angle, if this model catches on, it could massively improve the health of the entire token launch ecosystem, giving investors better project quality. Moving on from funding, let's talk about South Korea's presidential election. An event many people overlook but is actually super important. South Korea is the world's third largest crypto market with $5.4 billion daily trading volume and nearly 10 million active users. More importantly, Korea is often seen as the key benchmark for global projects entering Asian markets. The new president's potential changes bring both opportunities and risks for investors. Let's start with risks. Crypto tax policies might be implemented earlier. Looking at India and Indonesia's experience, once taxation begins, local exchange trading volumes could drop over 20%. For projects heavily dependent on the Korean market, this is definitely not good news. But there are opportunities too, like Bitcoin spot ETF approval. Interestingly, all major Korean presidential candidates support introducing Bitcoin spot ETFs. If Korea leads Asia in approving Bitcoin ETFs, it might trigger other Asian countries to follow suit. That's massive bullish news for the entire Asian crypto market. The potential reform of the one exchange, one bank model is also worth watching. If they really shift to a one exchange, multiple banks model, it would massively boost market competition, bringing users lower fees and better services. For investors, this means reduced trading costs and improved service quality. Korean won stablecoins are also a hot topic. While still in discussion phase, considering Singapore and Hong Kong are actively developing local currency stablecoins, Korea faces increasing competitive pressure. Once KRW stablecoins launch, it'll have profound impacts on the entire Asian crypto ecosystem, especially in cross-border payments and DeFi applications. Beyond these major events, there are some noteworthy M&A moves. Decentralized social pioneer Mask Network completed a strategic acquisition of Lens Chain native social app Orb Club. This acquisition is interesting. Mask Network is building a Web3 Tencent social landscape. From an investment perspective, Web3 social is a super promising sector. Traditional social platforms face issues like data privacy, content censorship, and value distribution, while Web3 social can solve these through decentralization. As users become more aware of privacy protection and data ownership, this sector might see explosive growth. But here's where things get absolutely wild. Just as we're all hyped about the Bitcoin Act, Musk and Trump, this once golden duo, are now going at each other's throats. This plot twist is more dramatic than any television show. Musk fired shots during his CBS interview, saying he doesn't want to publicly oppose the US government, but he also doesn't want to take the blame for everything the government does. More importantly, he's complaining that Doge has become the scapegoat for everything. Whether layoffs are real or fake, it all gets blamed on Doge. Sounds familiar, right? Classic workplace blame game. Then Musk went full blast mode on X, directly attacking US government spending. He said interest payments are already eating up 25% of total government revenue, and if massive deficit spending continues, fiscal revenue will only be enough to pay interest, nothing else. No social security, no healthcare, no defense, nothing. That's some harsh truth right there. From an investment perspective, what does this political infighting mean for the crypto market? First, policy uncertainty increases. If Musk and Trump really go full hostile, the Bitcoin Act we discussed earlier might face even more resistance. Even though Musk left the government, his influence is still massive, especially in tech and finance. More importantly, this split might affect the entire crypto industry's political support base. Previously, we saw tech moguls and political leaders joining forces to push crypto development. Now, if they're fighting internally, it might weaken the industry's political influence. For investors, this means increased policy risks and the need to more carefully assess political factors' impact on the market. But there's another possibility. This disagreement might actually promote more balanced and rational crypto policy making. If it's not one-sided support, but debate with different voices, the final policies might be more practical and sustainable. Long-term, this could be better for industry development. Right, that's a wrap on this week's market event recap. Which event interests you most? How do you think the Musk-Trump split will affect the crypto market? Or do you have any investment insights to share? Drop your thoughts in the comments below. If you found this helpful, smash that like button, subscribe to our channel, and hit the notification bell so you won't miss any crucial market updates. Same time next week, we'll bring you the latest market analysis and investment insights. See you then. Peace out.